In recent years, de-dollarization has become a hot topic, and naturally, there's been a lot of hype and excitement around it. But setting all that aside, what are the facts and challenges involved? I have a presentation for you today that will take a look at the history of failed attempts at de-dollarization, discuss the specific challenges faced by China, such as capital controls and the fact that they are a creditor nation. We will also explore the role of a hard money system as a potential alternative to fiat currency and why that could be problematic as well. The US dollar has been the cornerstone of the global economy since the Bretton Woods Agreement in 1944, which established the greenback as the world's dominant reserve currency. As a result, most international transactions are denominated in dollars, and central banks hold significant amounts of US dollar reserves to ensure the stability of their own currencies. This status has provided the United States with numerous economic advantages, including lower borrowing costs and the ability to run sustained trade deficits. However, some nations have grown increasingly concerned about their reliance on the US dollar, prompting calls for de-dollarization. BRICS countries comprising Brazil, Russia, India, China, and South Africa have emerged as major players in the global economy in recent years. According to a recent estimate, these nations collectively account for over 31% of global GDP based on purchasing power parity and have recently overtaken the G7 nations. This trend is expected to widen in the future. So it figures that BRICS countries are expected to flex their muscles when it comes to shaping the future of the world economy. Even prior to the conflict in Ukraine, China and Russia in particular actively pursued policies aimed at reducing their dependence on the dollar. Their efforts have included promoting the use of their own currencies in bilateral trade and accumulating gold reserves as an alternative to the US dollar. In February 2022, after the freeze on Central Bank of Russia's foreign exchange reserves held abroad, there is a sense of urgency to de-dollarize, not only on the part of Russia, but also on the part of many other countries, even those on friendly terms with the United States. The fact that these reserves could be confiscated so easily sent shockwaves among policymakers and planners all around the world. However, it is important to keep in mind that the desire to do something is not the same as being able to do that thing. In the 1960s, France, led by President Charles de Gaulle, tried to redeem its US dollars for gold due to concerns about the stability of the international monetary system and the value of the US dollar. Under the Bretton Woods system established after World War II, the US dollar was pegged to gold at a fixed exchange rate of $35 an ounce, and other currencies were pegged to the US dollar. This system was designed to promote stability in exchange rates and facilitate international trade. However, as the global economy grew and recovered in the post-war era, the United States experienced a growing balance of payments deficit. The US was importing more goods and services than it was exporting, leading to an outflow of dollars to other countries. This increased the amount of dollar reserves held by foreign central banks, including France. At the time, the United States was fighting a war in Vietnam, and wars cost a lot of money. There were concerns that the US did not have enough gold reserves to back the growing amount of US dollars. France, under President Charles de Gaulle, was particularly skeptical about the sustainability of the Bretton Woods system and the US dollar's role as the primary global reserve currency. President de Gaulle believed that the US enjoyed an unfair, exorbitant privilege as the issuer of the global reserve currency, enabling it to finance its deficit by exporting inflation to other countries. By redeeming its US dollars for gold, France aimed to protect the value of its foreign reserves and exert pressure on the United States to address its balance of payments deficit. This action raised concerns about the sustainability of the gold-backed US dollar and contributed to the eventual collapse of the Bretton Woods system in 1971 when President Nixon abandoned the gold standard and allowed the US dollar to float freely in the foreign exchange market. At this point, you'd think that the dollar would be toast, but you'd be wrong. In the aftermath, however, the Eurodollar system played a crucial role in helping the US dollar maintain its status as the world's reserve currency. The term Eurodollar refers to US dollars deposited in banks outside the United States, primarily in Europe. These deposits, which are not subject to US regulations, can be freely transferred and lent to other institutions, thereby creating a parallel market for US dollars outside the US banking system. The growth and expansion of the Eurodollar market in the aftermath of the gold standard's collapse offered several advantages that reinforced the US dollar's status as the world's reserve currency. The Eurodollar market's growth made it possible for countries to hold and manage their dollar reserves more easily without the need to convert them into gold. This decreased reliance on gold helped smooth the transition from a gold-backed monetary system to a fiat currency system anchored by the US dollar. The expansion of the Eurodollar market coincided with the growth of international trade and investment. By providing a readily available and stable source of dollar-denominated funding, the Eurodollar system facilitated cross-border transactions, contributing to the integration of global financial markets and solidifying the dollar's dominant position. The Eurodollar market enabled the efficient allocation of dollar-denominated resources across international borders. It facilitated lending and borrowing in US dollars, allowing market participants to take advantage of interest rate differentials and other financial opportunities, further embedding the US dollar into the global financial markets. In recent years, China and Russia have taken significant steps towards de-dollarization. Both nations have signed bilateral currency swap agreements with other countries, allowing for the exchange of their respective currencies without converting to US dollars. However, these currencies still represent a very small fraction of global transactions. According to a working paper by the IMF, the share of renminbi usage in cross-border payments is still around 2%, indicating that significant challenges remain. We've all heard a lot about countries backing their currencies with various types of commodities. But there is a big problem with that. And that is that governments do not want to do that. The reason is that a hard money monetary system imposes fiscal constraint on the government. In a commodity-backed system, the money supply is directly linked to the amount of underlying commodity held in reserve. Consequently, governments lose the ability to increase the money supply at will, to fund their budget deficits, or to stimulate the economy during downturns. This constraint can hinder the implementation of countercyclical fiscal policies, thereby exacerbating economic fluctuations and limiting the government's ability to address social needs and infrastructure requirements. Another key concern for governments contemplating the adoption of a commodity-backed currency is the loss of control over monetary policy. Under a commodity-backed system, the central bank's ability to influence interest rates, control inflation, and manage the money supply is significantly curtailed. This constraint can prove detrimental in times of economic crisis, as the central bank would be limited in its capacity to provide necessary liquidity or pursue accommodative monetary policies. Moreover, the loss of monetary policy control can weaken the government's ability to manage the economy. Now, if you belong to the Austrian school of economic thinking, these are all good things. You want less government intervention. However, things are the way they are. If you are a government, you make promises and issue debt, and you want to pay that debt in deflated currency. Remember, I'm not saying that it is a good thing. Unfortunately, it is just the way the game is played, and a commodity-backed currency is going to severely impede that process. And no government wants that. Not the United States government, not the Russian government, not the Chinese government. Now, we also have to deal with two other issues with respect to China. Firstly, the country's strict capital controls make it difficult for foreign investors to access its financial markets, limiting the appeal of the renminbi as an international currency. Additionally, remember that China is a large creditor nation. China's status as a creditor nation means that it will be difficult for it to supply the renminbi to other countries. For example, the United States provides dollars, and other countries provide goods. Therefore, there are more international dollars to grease the wheels of international trade. In this chart, you can see that China's current account surplus was $103 billion in the fourth quarter of 2022 alone. and the forecast is for this current account surplus to increase further. Dynamics like this make it very difficult to supply the market with enough renminbi. Now, looking at the current account of the United States, you can see large current account deficits. It is important to mention that over time, running large current account deficits as a reserve currency does hollow out a country's industrial capacity. Now that the United States is returning to industrial policy, it remains to be seen how successful the United States can be in that regard. Clearly, these issues are double-edged swords, but that is a topic for another video. So, what have we learned so far? I believe that the process of de-dollarization will be slow and challenging, potentially a multi-decade process. The US dollar's dominance is too deeply entrenched, and alternatives such as the renminbi and ruble lack the stability and trust necessary to replace it. However, the confiscation of Central Bank of Russia's foreign exchange reserves has imposed some very difficult choices for many countries around the world, including America's allies. They simply cannot just sit around and do nothing. Obviously, this is a huge topic and one video cannot do it justice. I will definitely make follow-up videos on this topic, so be sure to subscribe to the channel. If you've made it this far into the video, I want to thank you for watching, and I'll see you in the next one.